So hi everyone, welcome. I'm delighted that you're able to join us today for this event on making an impact with cash. My name is Tatyana Kleyman and I'm a board member of Impact Capital Forum. So just a brief intro for those of you who are new to ICF. The organization was founded 15 years ago as the Microfinance Club of New York. We rebranded as Impact Capital Forum about 2 years ago, recognizing the need for our programs to encompass the impact sector by addressing the use of all forms of capital. Financial certainly, but also human capital, technology, and natural resources. Our goal is to advance the impact, social enterprise, and microfinance sectors through innovation, collaboration, and thought leadership. We hold events throughout the year, including an ongoing working group on opportunity zones, a spotlight series on social entrepreneurs, and panel discussions on issues relevant to the impact sector, like this one. Even in this challenging COVID world, we strive to continue to bring impact professionals and supporters high quality content and networking opportunities. We're always happy to hear from you with any ideas on how we can continue to serve the sector better. Now it is my pleasure to introduce Emma Jenkins, who will be your moderator for today's panel. Emma is an analyst at JSA Sustainable Wealth Management and a Bard MBA in Sustainability candidate. Emma, over to you.
There we go. Thank you. Yeah, and thank you so much to the Impact Capital Forum for making this event possible. It's really wonderful to gather such a group of talented and purpose-driven individuals to discuss how we can make an impact with cash. I think it would be great if participants want to introduce themselves in the chat where everyone can see. That would be great, so we know who's with us. And we'll start by doing introductions for the panelists themselves. So with us today, we have Catherine Berman, who is an experienced entrepreneur and now the CEO of CNote. And CNote is an impact investment platform that is able to deliver competitive returns by investing in women, people of color, and low-income communities. Thanks for being with us, Catherine. And then we have Leah Woods, who has experience in both equity research and institutional asset management. She's currently the Director of Client Service and Business Development at Impax. Impax, of course, is an asset manager with a focus on investing in the risks and opportunities that might arise from the transition to a more sustainable economy. So thanks for being with us, Leah. Then we have Ebony Perkins, who her work is around helping investors and philanthropists make smart and strategic investment decisions as the manager of investor and community relations at Self-Help Credit Union. Self-Help Credit Union is a socially responsible financial institution that is supporting communities of all kinds, but especially those underserved by conventional lenders. So thanks for being with us, Ebony. And then we have Cathi Kim, who her work, she uses a variety of strategies for connecting capital to certified development credit unions as the Director of Inclusiv Capital at Inclusiv. And Inclusiv is an organization that helps strengthen CDCU's bottom line, which is both financial growth, but also helping low and moderate income communities achieve financial independence. So thanks so much for being here with us, Cathi. And I'm just going to launch into some questions for the panelists. I'll kind of direct a question to someone specifically on the panel and then welcome comments from the other panelists as well. And if people who are listening have questions, feel free to pop them into the chat and we will do a Q&A from the audience towards the end of the conversation. But first I'd like to direct a question to Cathi. Really curious to hear from you how impactful cash can really be. How would you characterize the level of impact that you're seeing among your member CDCUs? Have you seen engagement in their work increase, and to what extent are projects able to scale? I think you can give us a pretty good systems perspective and let us know the level of impact you're seeing.
Sure, great. Thanks for the questions, Emma. It may not seem really intuitive, but your cash and cash equivalents can be used to really advance different impact initiatives to help fight climate change and also support financial inclusion and economic development and racial justice initiatives. And it really does pay to invest sustainably and to look at where your money goes. What we've been seeing is just more and more interest from individuals and institutions seeking to advance change through their investments, and can also happen through the way you use your cash and your cash equivalents. For example, when you open a certificate of deposit at a financial institution, generally the financial institution will invest the money in other companies. But with CDFIs like Inclusiv and our network of over 320 community development credit unions and cooperativas in Puerto Rico, they use those funds to directly invest back into the community in the form of alternative to predatory loans, community-based loans to support local nonprofits, small businesses, help especially low-income community members and communities of color build wealth and assets through first-time home buyer programs, and really at the end of the day builds wealth in local economies from the bottom up, and so that these wealth and the assets are being controlled by members of the actual community. And what we've seen is that this is not just a nice idea, but this is a scalable and a sustainable way to affect change by putting money and power in the hands of the people and members of their community. And just a little bit about Inclusiv, our members are all either low-income designated, minority designated, meaning that they are led by and serve majority communities of color, and or are something called CDFIs, which is a designation given by the Department of Treasury. And collectively, they represent over $140 billion in assets. And so this is really a way to affect what we've seen in our relationships through our partners at Inclusiv, a really systematic way to affect systems change. And so really the dividends that you get from making these types of investments, and that we've partnered with over 60 different types of investors over time, has been that the interest is being used to really help close the sort of wealth gaps that we've seen and the financial inclusion gaps that we've seen, and unfortunately, which are disparately affecting communities of color and underinvested communities. And so really just to put some numbers and figures to what we've seen in terms of impact, I think it goes across three different sort of verticals, both the depth, the breadth, and who you're reaching in the communities, the sort of target market that you are focusing on. So through our own sort of deposits portfolio that we've really partnered with different types of institutional investors on using cash-related investments, those funds have been used to invest, 58% of our investees are minority designated institutions or serve majority communities of color, 100% of them. This is by regulations and the way our part of the market is shaped. 100% of the investments are going into what regulators have certified as being low income communities. And so you're having that direct reach there in a very sort of easy way. And so just by looking at the last quarter financials, what we've seen from our portfolio of deposit investees have been that they've used these investments to provide inclusive financial services to more than 2.4 million members of low and moderate income communities, and use those funds to provide more than $20.9 billion in loans directly into these underinvested areas. And one thing that you all might have heard a lot more about, especially as part of the federal response to the COVID pandemic, is the Paycheck Protection loan program. And so really looking at the depth and the reach that CDFIs have within their communities, those that are participating in our capital program have originated more than $310 million in these PPP loans directly into low-income communities and to enterprises that are led and operated by communities of color. And so in terms of the second question that you asked, Emma, really what has been the engagement that we've seen? We've seen it increase really both from our members and investees, but also our institutional investors, both those that have been, with us for years, as well as, and I think an emergence of new impact motivated investors, or those that have just started to learn more about CDFIs from our sort of membership end. We're at an all-time high. We are now working with more than 320 community development credit unions and cooperativas across the mainland, but also Hawaii, Alaska, and Puerto Rico. And what we've seen them do, even before COVID, but especially during times of great economic distress or natural disasters, which is what actually brought me into this industry, has been that they have been financial first responders. And this sort of alignment with mission and the desire to have that impact from this double bottom line sort of approach has really led to, one, an increase in membership at Inclusiv, but also the growth within these institutions. Collectively, they've seen their membership continue to increase even this time of the COVID pandemic and the shutdowns, as well as an increase in shares, more than 17% increase in shares during, the 7 or 8 months of the COVID pandemic that our country has been working through together. In terms of the investor end, we've also been speaking with so many new partners as well. And, before COVID, we had seen this growth, in fact, and we see this in different industries as well. Diversity, equity, and inclusion is a call and a necessity for social justice. It's also a successful business model, and we've seen this growth prior to COVID. And so really to help us at Inclusiv continue to meet the needs of this really growing and dynamic network of CDFI credit unions has been to, one, develop an impact deposits platform through which we can more directly connect investors in a very streamlined way and using technology so that they could check off the different types of impact initiatives that they're interested in and easily make these types of cash investments and purchase CDs in our circle and cohorts of community development credit unions. We've also worked with investor partners in not just starting their impact investing journey, but really developing and deepening their impact strategies. So it's going from, I think, from a moment to what we're hoping to build into a long-standing change and movement. And so just two quick examples would be, one, through our partnership with Mercy Investment Partners, which is a faith-based investor. They started off working with us through a deposits portfolio, all of which, by the way, is insured by the NCUA, which is the equivalent of the FDIC in the credit union industry. And while they started off with these cash investments, we worked with them to make actual equity investments in community development credit unions and to develop and design a portfolio that's focused on immigrant financial inclusion initiatives. And the last sort of seed and idea that I'd share with folks on the line today is in terms of doing something new and innovative, and ways we've been able to deepen the engagement with our partners, but also really support and look at the communities that we're seeking to serve. Those at the end of the spectrum is developing the Southern Equity Fund, which is the first ever impact fund for the credit union industry that's focused on strengthening both financial inclusion and explicitly racial equity in the American South, where we're seeing more deeper concentrations of predatory lending and where we see the highest gaps in terms of the racial wealth divide. And so by working with partners such as Kresge, who's a philanthropic partner, they came in as an equity investor and a diverse cohort of multi-sectoral investors from banks such as Bank of America, National Cooperative Bank, MetLife, and Prudentials. We're able to raise $45 million for this initiative. So I'll just kind of pause there.
That's wonderful. Yeah. And congratulations on that raise. That's really exciting. And everything you said was very exciting. It's it's always exhilarating to hear from you. And, Inclusiv has such a unique role in being a really supportive network of all of these institutions and the impacts that they're doing. So, so thank you so much for sharing all of that. And I really appreciated that you started your comments kind of, mentioning the difference between impactful credit unions and a conventional bank, and that really makes me think about self-help credit union, which is even to me much more impactful than many credit unions in terms of the work that they do. So, so Ebony, I wanted to turn it to you. Curious about how you communicate this kind of impact to investors. How does self-help measure and track the impact of the work that they do, and how do you tell these stories to your investors? Oh, Ebony might need a hand unmuting.
Perfect. Awesome. Can you hear me now?
Yes.
Great. So I think it would be helpful if I share a bit about self-help first and then communicate how we share our impact. That way it'll make sense to the greater audience. But self-help is a family of nonprofits that share the same mission of creating an equitable economy that's fair for everybody. We have 4 lines of service. One, which is our credit unions, which provide fair financial services in all of the 7 states that we're located in. We also provide loans that comes in the form of consumer loans, mortgages, commercial loans, many of the same basic loans that all types of people are looking for. And then we also have a real estate and community development piece of our work that provides a lot of community development efforts in the communities that we serve. And then finally, we also have an advocacy arm that works closely with elected officials, both at local levels, but also at the federal level, to try and support fair financial legislation to help people across the country. And so the way that we really measure our impact is there are multiple ways because of the vast areas of service that we have. We have a team that actually works to measure our impact to make sure that we are holding ourselves accountable and to make sure that we are staying aligned with our mission. And so some of the ways we do that, we track the number of loans that we make, each type of loan. We also track the dollar amount of loans. We track who's receiving these loans. So whether it's going to women, like our mission states, whether it's going to support diverse communities. We look at whether it's supporting rural communities, whether it's helping low-income people. And then we also look at our delinquency rates, making sure that the communities that we're serving, that they're actually, staying up to date with their payments. And so we're really proud that we have a very low delinquency rate. We also look at the jobs that we create through our commercial lending. And I know that that's something that we were really big on, especially with our PPP lending and the amount of jobs that we were able to save this year. Those are just some of the ways that we track our impact. In addition to just the amount of loans that we make, we also track our impact on the advocacy side by looking at various successes. Like for instance, last week we had a success in Nebraska where we were able to contribute to Nebraskans voting to have a cap on the level of interest rates across the state. So even though that may not be a numerical number that we can pull from, we consider that still impact through our advocacy work. A lot of the ways that we communicate our impact to folks, it varies. We do everything from the typical things like, sending out emails and having people sign up for our newsletters and communicating these stories through those venues. We've also gotten to a place where we realize that, sometimes it's really powerful for a borrower to share their own story and not have us speak on their behalf. And so we've turned a lot to testimonials and videos where you can hear about the impact through their words and not through ours. And so there are multiple ways we go about doing this. One thing we realize and we recognize is that everybody receives information differently. So some people who may be open to numbers and want to see the impact in numbers, they may not be open to stories. And there are some people who may be really interested in stories, but not numbers. And so we try to communicate this information in a unique way that really meets multiple people where they are and share that information in a way that different kinds of people can take. As far as how we communicate the stories and the impact that we're making, one thing that we are starting to be very mindful of is how we tell the story. I know that something we're having conversations internally about making sure that we stay away from what we call deficit language, right? And so being respectful of how we speak about our members and our borrowers, not always saying, you know, like, for lack of a better term, oh, everyone's low income and they didn't have a chance. They, you know, that sort of conversation, like realizing that the communities that we serve are making very valuable decisions and smart strategic decisions based on the cards that they have been dealt. And we don't want to disrespect them and how we tell that story. So that's something that we are always, or we're becoming more mindful of and respectful of in how we communicate our impact and what the type of work that we're doing.
That's great. That's so important. I'm a bit of an impact data nerd myself, and so, but to hear that your methods of communicating that are really inclusive by coming from multiple methods, I think is so important. And not to mention your last point about really that paradigm shift about how we're telling these stories, and for those investors to move beyond, you know, perhaps like a white savior complex approach to their impact, and really shifting that narrative. That's huge. So thank you so much for sharing that. So, you know, I think that we maybe have some institutional investors on the line, or at least folks who work for those organizations. And, you know, all of this exciting work that Cathi and Ebony mentioned, you know, I'm sure people are really eager to put some dollars to work. And so, Catherine, I wanted to turn it to you, because I think that, you know, CNote definitely has some solutions to that. And really thinking about this purely cash question, you know, if there's only a 250,000 per credit union that could be insured, what solutions are out there? What challenges do investors or corporations face if they're looking to move their cash and put it to work?
Yeah, no, thank you. Thank you for having me. And I'll start with saying, you know, I think the individuals that you get to hear from today are tremendous. And I just want to echo the strong words of Cathi. There is such an incredible opportunity to do impact with cash. It's so often overlooked, and yet it should be the no-brainer for all of us. Whether you're representing yourself today or you're representing your institution, it is, I would argue, the must-have for each of us to do. And you're hearing from incredible organizations like Self-Help, who's a long-term partner of CNote. And so there is not many excuses of why not. Really, where CNote steps in is the how. Right? So we know that these credit unions have been doing tremendous work for years. We know Inclusiv has been an incredible organization supporting them for years. So we know the infrastructure and the industry is there. And so where we really try to step in at CNote is the how. How do we reduce the friction to make it easier for investors to do it? At the heartbeat of CNote is really technology and impact. So how do we use the power of technology to make it easier for investors? What we've created is a solution called the Promise Account, which we call the headache pill, because really all what we're doing is making it easier to invest in these amazing organizations. We always say you could absolutely go and find 12 amazing credit unions and open up the accounts yourself, put money in yourself, go manage 12 different websites or go to 12 different organizations and do it. And that's a lot of work. So if you want to do it, fantastic. Because again, the end result we want to see is more deposits into these organizations. If you don't want to do that, and especially knowing you probably can't do that in the middle of a pandemic, we created a seamless tech solution to do it. So it's essentially one stop. You have one account that you open called the Promise Account, and literally all of your deposits are going to amazing organizations like Self-Help. And so the real hope there is to make it easier on individuals and institutions to say yes, to manage their deposits from one place, both their deposits and withdrawals, their impact, but also easier on the credit unions themselves, right? Because what we forget is when we, if 100 different investors get excited, that's 100 new investors that credit union has to manage. And so, how do we do this in a way that's also a lighter load for those institutions? And so what we work a lot with at CNote is if you're doing $250,000 or less, we encourage you to go straight to that credit union. Pick up the phone, call self-help, go online, right? Open up that account. If you're a larger institution, you're doing more, whether it's $1 million or $100 million. This is really where our solution, we think, plays an important role. And I will also say, what Inclusiv is creating, their platform, I think, is a tremendous opportunity for this industry, because it's really highlighting all of the different opportunities, which I think a lot of investors don't realize, in terms of varied geography and varied rates. And so I think it's a very exciting time for individuals and institutions to step in with very little excuses of why not, because we really have created the pipes to make it easier to move your dollars in a very seamless way into these incredible institutions. And it's free. And there's no fees. So one more reason why, time to do it.
Wow, that's amazing. That's really exciting. How long has CNote been doing its work?
Yeah, so we're getting close to 5 years. Always focused on really the CDFI industry. We moved into working with low-income designated credit unions just last year. And for us, again, it's how do we continue to create some of that needed infrastructure so that more and more folks know what these great organizations are doing and find it easier to move money into them.
Yeah, that's awesome. There's so many technology solutions that are out there. I kind of want to switch gears, since we're already at the half hour, so that we can hear from Leah a little bit. This is the perspective of the asset manager, and thinking about, if you're allocating funds from one position to the next, there's certainly a cash position and a cash equivalent position to consider. So Leah and I had talked about this a little bit. What are the challenges for asset managers or portfolio managers when we're thinking about cash within the cash position? Is Impax thinking about inclusion criteria, or perhaps the risk of different cash positions and the opportunity that can pose for impact? What's your perspective on this?
Thank you. First of all, thank you so much for including me in this conversation. It's been eye-opening and really just super interesting to hear. I'm honored to be part of this esteemed panel. So from our perspective, we don't obviously neatly fit into this conversation because we are an asset manager, and actually our clients pay us to be fully invested. So, they invest with us because they want us to grow their capital and deliver excess return above a benchmark, and obviously the impact that's associated with those direct investments in companies. But there is a cash position, as you mentioned, Emma, and I think it is an important point to make. For us, we're stewards of capital, but much of the time our clients are actually in control of their cash position. So if they invest directly with Impax, they have a cash portfolio, and that is kind of pooled with all of their other managers, and they actually have the ability. So a lot of times the onus is actually on the asset owner or the investor in a strategy. That said, there are certainly funds, mutual funds, et cetera, that should probably consider something like this. I can't speak for Impax specifically because obviously I'm not a decision maker at the firm when it comes to that position. But I think in terms of the challenge, yes, for us, a lot of the time, it's up to the client to do what they want with the cash. I think this conversation is fascinating though, and I could see how impactful this position can be, even if it's 2% of our overall assets. It's a significant dollar amount that then could be used to make an impact. So I think the line we'd have to walk is just, being fully invested and doing what our clients pay us to do, while also considering that some of this cash could probably be put to work in a better way. The other challenge that I've heard internally as I started to kind of prod around and ask this question, which is a great one, is just that rates have been so low that we've actually not been using sweeps as we previously had in years past. So I think the other challenge is, why take any risk if the rate is so low? And so that was another kind of angle that I thought was worth bringing up, and would love to hear what others have to say about those kinds of things. So.
Yeah. Thank you, Leah, for sharing that perspective. I'm curious if any of the other panelists have ideas or solutions or comments on this perspective. Great. Yeah. Well, hopefully it'll spark the thoughts of people who are listening and thinking about this and continuing to press this question, because at least from my perspective, it seems like a really great opportunity to reach true impact and integration of ESG in an investment portfolio. There's plenty of information about ESG and impact investing in equities and businesses and from the bond perspective, activities in the loan, but people aren't looking at the cash position with the same questions. So I'm curious to see what might emerge in the future as the space continues to develop. My next question is really for all of you. I'd love to hear all of your perspective on this one. Really just thinking about the unique historic moment that we're in today and what does impact really look like in today's context. Goes without saying, but the convergence of crises that we face, especially around racism and the pandemic, and already there's been some mention of the PPP loans and impact in terms of jobs and employment. But what other challenges do you face and what solutions are on the horizon? And it seems like there's been steady inflows into cash products that are impactful, but what else has been happening in this unique point in our time? Catherine, want to start? Oh, needs help unmuting.
We're having some unmuting technical difficulties, I think, today. I love that question because I think it's I think like it's hard to have a panel right now, right, without making sure we're really addressing this head on. I think both in an intentional way and also having those hard and awkward conversations. I think I'll state it, and then I think Cathi could probably do this 10 times better. I think we're seeing a really interesting movement of cash right now that hasn't been seen for years, specifically from very large depositors. And I think the concern for all of us working in this space is short-termism, right? Is how do we make sure that these wonderful commitments that are coming out are not for naught, right? Are not, here 1 year and gone the next. And so this is one of the things we're trying to work hard with our partners is when I say creating the pipes, I mean it. How do we create the pipes so that these deposits stick around? And how do we really get a pulse check on that to make sure there's intentionality of where they go? And we see this on the loan fund side too, right? I would say, over 90% of our Promise account deposits have gone into communities of color this year. That's not enough. It has to be next year and the next 5 years and the next 50 years, right? And so I do think there's some huge opportunity for infrastructure building right now to make sure that this is not a fad or a trend, that this is here to stay and this is just a door opener, right? So that I guess I would just share is from a market perspective is it's exciting, and yet I think there's a thoughtfulness I think we have to do to make sure that the deposits stick around and that they're very intentionally going to not just communities of color, but those institutions led by people of color. And I want to turn to Cathi because, again, I think she'll do this even more elegantly in terms of what the industry is seeing.
Yeah, no, Catherine, I just plus one to what you said. And I am just so excited that we have these, experts and these different varied narratives and voices on the line. Like right before we got started, Ebony pointed out how this is a panel of women, and that there wasn't much effort required, that we are already seeing more diversity within various sectors of this larger movement is really exciting. But just as Catherine mentioned, how do we go from moment to movement? And I think this is probably don't use the term reimagine or creative when you're talking about finance and investments, but also to the points that Leah has shared, just kind of looking at the math of it and where we are right now. What is the risk? What is the cost right now? The opportunity cost to this is just so low. It's just like the returns are already where they are. We know, and I think when we're talking about impact, it's helpful to kind of work backwards and understand what are the issues and the sort of market needs that we're trying to address. And it starts from there. And I think it starts from one, just starting with a cash account that's fully insured when we're making either a Promise account, a deposit at self-help, or through Inclusiv. CDFIs have a very, very low default risk. At Inclusiv, for example, we started our investment program in 1982, more than 200 million in investments into these credit unions that serve predominantly low-income communities. We've never defaulted on an interest payment. We've never defaulted on a loan. And so there's that. And just as with your fiduciary duties, that's a very risk-free sort of investment. But I think in addition to that, just with anything else, you just get started, and then that helps to, I think, for your team individually, but also for your institutions that you might represent, start developing these muscles. We learn by doing, and cash investments and making these deposits are a great way to start. But I think as Ebony shared earlier, and I love the points that you shared, it's about also shifting the narrative, right? And what we're sort of understanding the needs. And I think also from our investment strategies, how are we measuring success? What are the KPIs that we're integrating into our investment portfolios? Yes, you're going to look at a yield, risk, but also are you integrating specific impact measurements? And I think this is the time now that, we have collectively, and although I think some of us are experiencing, different dynamics and dimensions to these multiple crises that our world is going through, really, how do we turn that into a sort of long-term accountability plan? And we're creating this longer-term movement. And I think it starts with also, issuing some sort of statement of commitment to impact, but then also turning that into movement by integrating and reporting on that, assessing your portfolios and seeing where you are and where you want to be. So just kind of pause there and turn to the other expert panelists we have on the line.
One thing that sticks out about this moment for me is the widening gap between the haves and have-nots. And I think that is just evident in the market, like improving and doing well right now, compared to the large number of people that are unemployed. And I think at this point, there is it's really important for us to, us to make sure that we aren't leaving people behind. And so like with the PPP program that self-help we participated in, we as a community development financial institution, we had a lot of the relationships on the ground. We had a lot of relationships with organizations who may not have, those big relationships or those large relationships with like larger financial institutions so that they can't just make a quick call to and get a PPP loan. Like we worked with a lot of nonprofits, and I'm not just only speaking on behalf of self-help at this moment, but also all CDFIs. Because we were able to reach out to the people that we knew needed help and then to walk them through the process so that they wouldn't be left behind. And then also one thing that we were super proud of through our PPP work is that the average loan size was like only $20,000 to $21,000. That may not mean much to other people, but for us, that simply meant that we were working with the average Joe, not the large businesses that could call larger banks and get what they needed. And I think that's the case for a lot of CDFIs. We were, for lack of a better word, we were well positioned to help people on the ground in our communities. So I think that that's really important piece of it all, of everything that we're talking about, is adding that humanity to the conversation around investments. I think a lot of times, just because of the nature of the larger industry, we always think about it in terms of numbers, but there's a humanity behind all of this. I would also like to say, I think that this is a huge, for lack of a better word, opportunity for the industry. I think that right now there are so many people who never once considered aligning their money with their values. And because of everything that has happened this year, from COVID to George Floyd's murder, to the economic downturn, people are starting to question this. I think this is an opportunity for our industry to not only show that this is possible and that it's been done, but also to demonstrate and communicate the impact. Because I think, like Catherine was saying, we don't want people to think that this is a gimmick or that this is something that's a fad and will be gone. I think the impact piece is more important now and making sure we communicate that than it was previously.
Yeah, such important words, Ebony, and from all of you. I know that I'm really hoping for that sense of endurance when, from the investor perspective, maybe things seem to be going in a better direction if there's a vaccine and a more inclusive seeming government in power, that maybe investors would kind of forget their feelings of being compelled by impact stories. So I just really hope that when we get through this time of tumult, that people will still be really dedicated to their impact commitments that they're making during this time. Leah, I know that you maybe have to duck out a couple minutes early, and would love to hear your comments on this final point about the here and now. There's also a couple of questions in the chat that I saw that are maybe targeted towards you. Specifically, I think there was a question about a minimum for investing with Impax. And then also someone asked kind of what's the difference between impact through cash and impact through stocks and bonds. So feel free to use your last couple minutes to go in whatever direction.
Thank you. Yeah, great comments from everyone here. I think just to kind of translate some of what Ebony said into what we've seen in our business is just a huge amount of interest and growth, really year to date in this period where so many things came together, and in terms of the interest in what we do, what's been interesting for me is that in the US in particular, many of our clients have traditionally been mission driven. So endowments and foundations, where our alignment with our clients very neatly lines up. What we've seen more recently is this movement into the space by more mainstream investors, which I think has been something that's really encouraging and has been something that has been kind of pushed along the way by all of the kind of factors that Ebony mentioned in her comments, really an increased focus on sustainability. We at Impax have always believed this massive transition is underway, to a more sustainable economic model. And I think all of these factors have actually just sped up that transition. And we've found that through COVID, the companies that we invest in were actually much more resilient because of the way they focused on the social aspects of their business. This is crucial to our analysis of companies, is how do they treat their employees? What are their benefits packages like? What are their relationships with the labor unions that they might be related to? And all of this is something that we consider just as important as any other investment criteria when we make decisions. So I think, it's also translated to better performance for us through this period. And I think that has helped potential clients really see the opportunity, quote unquote, here, because obviously there's a lot of tragedy involved with this as well when it comes to climate change and racial injustice. But mainstream investors are looking at this now, which I think has been really interesting. To answer some of the other questions, there's various ways to invest with Impax, and I can't exactly speak to those because of compliance purposes, but I'm happy to follow up with you, Emma, after the fact with some resources on that. And then the other question was around, I'm sorry.
The difference between impact with a cash product and impact with a stock or a bond.
Right. Okay. So our clients definitely, depending on the client type, our clients are typically interested in investing with us to grow their capital. So every client has a different objective, and there's different portions of their portfolio that they invest in different ways. So our investments are typically in the return-seeking side of the portfolio. So helping clients grow their assets. For a pension fund, that might mean that they have to pay out participants. So they actually need asset growth rather than just asset preservation. So for us, we're on that growth side of the equation. And that's why we have to focus more on investing in companies that will outperform the market and therefore deliver on that financial growth that our clients really need. In addition, obviously, to this impact that's associated with investing in companies that are well positioned for this transition to a more sustainable economy. So thanks again for including me. I mean, my last comment will just be, personally, when I've thought about impact, and how closely it's tied to financial capital, I've always thought that, there are really three ways to make a difference. How do you make your money? Where do you work, and what are you doing to help with this transition? How do you invest your money? Are you investing in financial products that are actually aligned with your goals? And then how do you spend your money? Are you buying and supporting small business and companies that are using that capital in the right way? And so, this discussion around cash is so relevant in each of those areas. So I just thank you for including me and for starting the conversation, really, because I've learned a lot here and have definitely started to push some buttons too, not just internally, but with others I know in the industry. So thanks.
Thank you, Leah. So glad that you could join us, and feel free to pop off whenever you need to. See you soon. Great. Well, there are so many interesting questions in the chat. There's one that caught my eye because it deals with the common person, and I think in our conversation today we've talked a fair amount about institutional investors. So what kind of product options are available for the everyday person who might want to keep their cash reserves in a place that is more aligned with impact, and what solutions are there to really democratize impact investing for people who don't necessarily meet the criteria for some of the larger scale investments that we're talking about?
Yeah, I can share a little bit. I mean, I think obviously we talked about everything today is for individuals, right? So I think anybody today can call up self-help or go online and start an open account. So that's to state the obvious. I think when we go more into the CDFI loan fund world, there aren't a lot of options, but I will say the three that I would highlight today. One is Calvert Impact Capital. So Calvert's been around for years. They're a tremendous organization. They've got a fantastic note. So I think that's a great opportunity to get a real diverse exposure, because you get to invest in CDFIs and a lot of international microenterprise organizations. So from an impact perspective, I think it's a really exciting, diverse opportunity to get impact. I think CDFIs themselves are, a lot more CDFIs are coming out with notes. And so I always say encourage to find out, go to OFN and find out who your, ofn.org and look for your local CDFI and see who's in your backyard and see if they have a note. If they don't, we're happy to help. It's what we do. So we certainly can help bridge that gap for those who don't. But in general, if they do, we say directly invest in that CDFI. And then at CNote, we obviously have some investment opportunities. Our flagship fund was created with the intention of democratizing CDFI loan fund investment. So there's, certainly more than there were, 20 years ago. But unfortunately, I think my hope is we see a lot more. And my hope is we see some large institutions really step into this and start custodying and offering more of these opportunities, so that more and more individuals of anyone, whether you're high net worth or not, whether you're 18 or 98, can step into this and invest with their values. I don't know if others want to chime in on that.
Yeah, just what Catherine said, on our website, inclusiv.org, we also have a full listing of our 300 plus member community development credit unions, including the self-help family. So definitely feel free to, and we encourage you to reach out directly to this national network of CDCs as well.
Great. I see another question that's come up about, is there a way for investors to direct their deposits towards certain SDGs or impact goals? So, perhaps is there a way to kind of customize the outcomes of the projects that you're invested in?
I can speak to some of what we offer at Self-Help. We actually have specialty CDs that we've created to help you fine tune where areas that you would like to support. And we have 3 in particular, and we're always considering creating some others. But for instance, we have a women and children CD that allows you to allow zero deposits to support like women-headed households, women-owned businesses, early childhood education. We also have what we call our green CD that supports a lot of our environmental lending. And then we also recently created a community recovery CD in response to everything that has happened this year. So supporting communities that have been affected by COVID-19, as well as just the overall civil unrest that's going on in our country. But those are just a few of the options I know that we offer at Self-Help.
Yeah, but adding to that, so with the impact deposits platform that I mentioned earlier, we have customized impact filters. And I love this question, by the way. It's not coded in the language of the SDGs, but there's a lot of alignment there. Financial inclusion is a sustainable development goal, racial equity, climate change. Also, all of the CDs are fossil fuel free investments, given by nature the business model of CDCUs. So I would just flag that, but I'll definitely take those comments back to our tech team.
Great, thank you. There's another question, maybe we'll make this one of our last questions. Is there a way to tie this with ESG reporting? If so, how do we connect the dots? So perhaps thinking about not just impact, but ESG more broadly. Does anyone have any thoughts on that? Catherine, sure. You need help with your mute?
So,
no. There you go. Now we can hear you.
Mute myself because I've got 2 young kids working in the background, and so sorry, I didn't. In this one, I can't unmute myself, or else I go on unmute forever. I go on mute forever. Yeah, it's such a great question. So one of the ways that we built our tech is to loop in actually to reporting, and so you can get those specifics into your reporting system. But I think it is such an excellent question. I think it's for us as the industry to really tease out, because to Ebony's point, the impact is there. And specifically with CDFIs, they've been delivering on impact reporting for years, right? When you think specifically about their CRA obligations, or even just the investors they've worked with, institutional, demand to know what their dollars are doing. And so I think it's really, beholden to us to make sure that we're connecting that into what those existing frameworks are. So yes, I can say certainly we do that for our institutional clients. But it's always about what that is on your end, right? What are you currently using, and what else do you need?
Yep, and at Inclusiv, we also do customized quarterly investor reports, speaking to impact as well as the financials as well.
Okay, excellent. Well, we're nearing the top of the hour, so thank you to everyone for joining us, and Impact Capital for hosting, and our panelists for such a great conversation. And I hope that everyone who's with us found it to be really informative and actionable, and that everyone is able to take these insights moving forward and putting this to work with your cash in whatever way that means to you. And so, I hope everyone is staying safe and staying well wherever they are. And with that, I think we'll conclude the panel conversation, and maybe I'll turn it back over to the ICF team if they have any other closing words.
My video is disabled, but yeah, now you can all see my daughter. Thank you so much. This is a fantastic panel. Thank you very much to all the panelists. Thank you for everyone who joined us. We hope you found this informative. If you have any suggestions or ideas for future events or comments on this event, please don't hesitate to contact us. There's info@impactcapitalforum.org, or you can reach out to any of the board members directly. Our bios are on, here I am. Our bios are on the website, and our contact info as well, I believe. Thank you so much. Have a good one.
Thanks for having us.
Thanks, everybody.
Thank you.
Thank you. Bye-bye.
Bye.